Good morning, everyone. Welcome to our panel on AI powering insurance. I'm Meryem Duygun. I'm professor and Aviva chair in risk and insurance at Nottingham University Business School at Nottingham University. We have a tremendous panel here. I appreciate you are being here. We have Craig Sewell, Head of Data Innovation, R&D and Analytics from Data Lab, Lloyd Corporation. Vivek, Jetley, Executive Vice President and Business Head, Analytics, EXL Services. Alan Tua, Head of Analytics and Data Science from Direct Line Group. And Mohsin Rashid, Director of Corporate and Strategic Development from Cambridge Mobile Telematics. Thank you all for coming to our panel today. The goal of next 45 minutes is to discuss key topics on the impact of AI on insurance, particularly on how AI can be used to improve underwriting, claims management, fraud detection, compliance, and knowledge management. We will also cover issues around AI and ethics. We will talk about the impact of AI on the future of insurance and how AI can be used to improve the efficiency of business processes. So here is how this will work. I'll say a few things to kick off, and then I will throw questions to the panel. Each panelist will take his turn to talk around 4 minutes. After the second round of questions, there will be opportunity for the audience to ask questions. So before we take longer, I would like to start. It's a great pleasure for me to be here, to be part of this timely debate on AI that have the potential to reshape the insurance industry and create benefits for everyone. AI, artificial intelligence, the capability of a machine to imitate intelligent human behavior, increasingly being used in society in all sorts of ways. AI is expected to change society. For sure, AI is redefining the insurance basics, such as reducing information asymmetry between insurers and insured due to enhanced data and allowing better predictability and monitoring of risks. As a second-order effect, AI is expected to improve efficiencies and product innovation. Indeed, it is exciting times for insurance industry. Currently, AI in insurance industry is mainly used in the areas of claims management, risk selection, pricing, fraud detection, and intelligent chatbots for customer advice. According to the International Data Corporation, the investment in cognitive and AI systems will reach up to $77.6 billion in 2022. A significant proportion of these investments aim to develop enhanced conversational AI applications such as chatbots, deep learning, and machine learning applications. These technologies could lead to savings of around $1.3 billion in the auto, property, life and health insurance sectors, and help to significantly reduce the time it takes to settle claims, which will improve customer satisfaction and retention. Challenges and opportunities are out there for us to take. We are pinning down the milestones of an extremely interesting period, and we are compelled to take part in this process of transformation. That's why I'm honored to be here to moderate this panel with prominent exponents of this exciting process. I would now open the floor for the first round of questions to find out from panelists their general overview on the impact of AI on the insurance industry, particularly on how AI can be used throughout the value chain to improve underwriting and claims management. How can AI benefit fraud detection in insurance? And how are AI-powered voice bots improving customer services? We shall start with Craig Sewell from Lloyd Corporation. As you know, Lloyd Corporation is not an insurance company per se, but more of a regulator. So their use of AI is more in the knowledge management and regulatory compliance areas, and less about fraud detection and even less customer chatbots. So We are going to request Craig to start with the impact of AI on knowledge management and compliance areas. Thank you.
Hi, thank you, Meryem, and good morning, everybody. I think it is still the morning, isn't it? So my role in Lloyd's, it covers both angles, really, in terms of working for Lloyd's, the corporation, but also supporting Lloyd's, the marketplace. And there's been two very different kind of use cases for the application of AI. So I'll start with Lloyd's, the corporation. We are regulated ourselves, but we are also a regulator of the market, Lloyd's market. So our customers are the members of the Lloyd's market. So in order to improve the service that we offer to our managing agents and brokers that form that market, we identified a couple of areas where we could use AI, so typically starting small scale and doing proof of concepts. And those are typically around knowledge management. So our Lloyd's market use us to provide regulatory advice, tax advice, local law that applies in a jurisdiction. So if you can imagine the types of risks that come through and get insured from the Lloyd's market, they're very specialised, high value risks. So your typical the scenario I use is the super yacht that's being built in a particular area. It has to travel across the continent to the customer at the end. It's going through many different regulatory areas that they're all going to have their own laws and legislation. That when that super yacht is being priced as a risk, that there's going to be many different factors, many different local influences on pricing that risk. It's our job we've got a team within Lloyd's that provides that international, it's called the International Trading Advice Team. We tested out an AI application, and it was the natural language processing element of AI to really speed up the time of Lloyd's answering that question for the members of our market, because that was really the difference between whether the Lloyd's market got that piece of business or not. It went somewhere else. And then the other aspect is actually to use AI to speed up our regulatory processes, our regulatory compliance. And typically, again, we're kind of focusing on natural language processing, natural language understanding. There's a lot of documents, paper documents, PDF documents, Word documents that get used in the Lloyd's marketplace. We tested being able to OCR the documents, create structured data using AI and algorithms off those PDFs. And then creating an algorithm to read in those documents and kind of really speed up the amount of input that's needed by a human being. We found that you could put an AI machine over about 80% of the contracts and the clauses that were coming through to enable the staff to work on the really complex 20% that actually a machine couldn't yet cover. So kind of those are the two use cases that we've used AI for at the moment. We'll stop there.
Thank you, Craig. Vivek?
So in our case, Meryem, we actually, what we do is we help design machine learning and AI algorithms for our customers. Given the expanse of customers that we have in the insurance space, what we've seen is effectively getting exposed to what each one of those customers is trying to think through and use AI for. Much in the same way as Craig's, Lloyd's kind of helps their stakeholders, use AI and leverage it. We've been exposed to some of those same things. I'd want to highlight two examples of things in addition to what Craig talked about that we've been exposed to. So I think the first and probably the most important part is how insurance companies are using AI to deal with unstructured data. Craig talked to you about the example of natural language processing, and we see that across the board Most companies are now investing in building that capability. And it's a phenomenal game changer, because just the ability of ingesting that information and parsing through long documents and replacing an expert human with a machine is really powerful. To build on Craig's example, what we've done is we've actually created a deep learning algorithm that effectively reads through those documents and uses the knowledge that you have about how a document, what the content of a document is, and extracts the information. We've also created an element of that for image analytics. So for one of our home insurance customers, we've actually created an algorithm that can effectively look at an aerial image. Let's think about it as a satellite image or something of a roof, and be able to come down to the actual damage in the roof in terms of counting how many shingles are damaged, and correlate that effectively to what the overall exposure is or what the damage for that is. And it instantly translates to an outcome of saying, well, I know what that damage is without having to send an adjuster there. And if the claim is within that particular number, I've instantly speeded up the claim, and I've ensured that I don't take that particular cost on. So that's one big application of just speeding up some of these processes. The other one, which is where AI actually starts improving the outcomes of what something used to happen, but AI now takes the bar up, is on fraud detection. Fraud by its very nature is something that is morphing and constantly changing. Fraud networks, fraud rings keep evolving their tactics to take care of, to basically be one step ahead of the rule set that an insurance company places. And this is one area where AI actually takes the game a little bit further, because what you're saying is, if a rule set could basically be gamed by someone who's out to defraud the company, but if you have an algorithm that keeps monitoring the data streams, then you're effectively keeping pace with what the fraudster is doing. And we've seen some phenomenal work that's happening right now in terms of using the data streams for identifying fraud rings and fraud networks. And it's a capability set that I didn't think existed 5 years ago. Where we are today is a dramatic shift already.
Thank you. Mohsin?
So in our line of business, and we're a telematics service provider, for us it's really about using AI to improve outcomes. So we are fundamentally a technology company. Our background is really in AI and data science. And when I say improving outcomes, I look at that from two perspectives. One is what is important to motor insurers today. Ultimately it's improving their combined loss ratio. So what contributes to that? One is, I suppose, quality of revenue. So in that respect, we are able to provide a great deal of input into risk scoring and risk segmentation of drivers. So as an example of that, typically today, drivers are scored on a number of demographic factors. The process is not dissimilar to credit scoring. So you can basically, most insurance companies can segment drivers into 7 or 8 categories. We're actually able to, through the use of AI and the amount of data that we collect, offer insurance companies up to 22 times segmentation or 22 times lift ratio. On the other side of the equation is really improving the cost base by eliminating fraud and simplifying the claims process. So there the ability to do that is really driven by the fact that we work very closely with a lot of insurers. And so on one side, we are able to access real-life claims data to be able to improve our algorithms, improve our ability to assess the impact of damage, forensically recreate accidents, and therefore expedite the claims process, making it far less manual, really eliminating a lot of the need for manual oversight or input into significant parts of the process. The other side, as Vivek touched upon, is fraud is a huge problem in insurance. And what we're also able to do is really, as we improve the quality of claims data that we have, eliminate fraud through, we can detect what types of claims are fraudulent, but also into that feeds our ability to forensically reconstruct an accident and therefore analyze which parts of the vehicle are damaged. Is what is being damaged accurately being claimed for or not. And then at the end of the value chain, we're seeing applications of AI really being used to replace manual damage assessments. So we're seeing a number of businesses now who are training algorithms to automatically recognize damaged areas of a vehicle. They connect to all of the relevant OEMs, so the whole process of assessing damage, manually pricing up the cost of an accident is becoming more and more commonplace.
Thank you, Mohsin. Alan?
Hi, thanks. And thanks for having me. I have the challenge of being fourth and therefore being trickier to be additive in terms of content, so I'll give it my best shot. I think just to touch on some of the things which have been mentioned already, we've obviously spoken about kind of the opportunity for AI to digitize and make slick existing processes for organizations. And there's also a big opportunity to create entirely new ones. This is probably extremely relevant in the risk management space. So obviously you can use a machine learning algorithm to kind of have a straight triaging of a damaged vehicle. Or we can also think about AI and machine learning in the context of supporting drivers to kind of drive better and therefore mitigate that risk. So at Direct Line, we have a program where, as part of our telematics business, we kind of use data science to tell us which drivers we should be coaching to help support become better drivers and therefore achieve a better outcome for themselves, and obviously kind of manage our own claims proactively ahead of time. So I think that's maybe one of the things which we haven't discussed yet. I think another interesting piece is the voice bots, which you mentioned earlier on. I think within the insurance space, it's particularly tricky because when a customer needs an insurer, they're panicked, they're stressed, their house is flooded, they've just crashed. So it's not like an opportune moment kind of to embed kind of a bit of technology which can keel over, as opposed to maybe a retail banking organization like Revolut, which have, I think, probably one of the better voice bots out in the market. But there are still plenty of opportunities, and I know a number of insurers, including ourselves, are exploring that sort of thing when it comes to some of the more mundane conversations we have with our customers around kind of providing information around policies, etc. But really, with chatbots, voice bots, digital assistants, it's about thinking about the use case in a customer-centric way, just making sure it's appropriate for the customer to be having that conversation with a bit of technology. But the technology is certainly there. I don't know how, it's probably worth Googling. In 2018, I think it was around May, Google demoed live on stage their tech booking a hairdresser appointment live, just completely digitized, and it works. So the tech is there. I think it's just a question of maybe these customers from an insurance perspective kind of getting on board with that sort of kit as well.
Thank you, Alan. We received comprehensive answers on our questions, the impact of AI on wider applications. So I would like to ask you another question regarding the ethics. So given now given the potential for even wider AI applications, do you think an ethical code of conduct is needed when it comes to AI and its applications, and why?
I have the benefit of going first now, always a plus. Very short answer is yes. I think this is something which regulators are thinking about already in the UK, a bunch of industry bodies are thinking about in the UK. And I think the reason it's needed is because it's such a thorny, complex issue, even academically. So incidentally, there's a conference which happens around January every year called FAT, which is Fairness, Accountability and Transparency. And 3-4 years ago, this was a backwater type conference. Today, they have tens of thousands of submissions from the academic world, and I think it talks to the fact that it's a difficult thing to solve, and there are so many ways that the kind of challenges can be addressed, and therefore I think the industry as a whole needs some guidance, some guardrails, maybe not in an overly prescriptive way, but at least at the principle level, which I know is kind of what some of the regulatory bodies in the UK are looking at already, to help guide organizations. Because it is, it's a thorny issue. One of my favorite factoids is that, for example, in measuring bias and discrimination, of which there are kind of quantifiable metrics to bias and discrimination in an algorithm, there are dozens of metrics which one could use. A lot of them are mutually incompatible. So if you increase fairness in one metric, you're decreasing it in another. And that's the inherent complexity of what we're trying to deal with here. So yes, that's a long-winded way of saying yes.
Thanks, Alan. Would you like to add anything, Vivek?
Yeah, so I think the fundamental question about do we need supervision of AI models, specifically from the ethics lens, I think the answer is unambiguously a yes. And the reason for that is, as Alan pointed out, it's about bias. Now, bias exists in all human decisions as well, right? So we're not basically saying that human beings are unbiased. We are deeply biased. But the hope here is, and the risk here, is that a machine can actually start eliminating the bias. But more importantly, if a machine starts getting biased, we don't really have the means of controlling it. So the bar has to be higher in terms of saying, well, let's understand if at all there's a bias in the way the machine's making those decisions. There's a ton of examples where in designing some machine learning algorithms that bias has been introduced. One of the big examples in the US, for example, was and in the US prisons, in the US federal system, they started looking at photographs of people, and they tried to design an algorithm which was going to start predicting sentences, prison sentences for people. And the data was biased, nobody controlled for it, and before you realized it, the machine started predicting an outcome which basically had longer sentences for a certain race as opposed to the other. And these kind of things, when we start thinking about how AI is getting adopted in all social interactions, it raises a very, very deep concern. So I do think that there's a big need for regulators to step in, and there's probably the need for a chief ethics officer at some point to be created, at least in insurance companies.
Thank you, Vivek.
So the answer is yes. I won't be controversial and go the other way. Yes. Lloyd's has created kind of an AI strategy now, of which ethics is a key component of that. And we went down that route because we were conscious that we kind of put in 2-point solutions, if you like, of using AI. We could see that there were going to be lots more opportunities. So in order to kind of identify where we would go in terms of which one was going to be the next, and to kind of bring the staff in the corporation with us, and with it being a high profile in the media about use of AI and the bias that can be introduced into the outputs. We did some research, we looked out with academia, we looked at what other organisations were doing from a kind of an AI ethical point of view. Obviously the regulators, the EU, Bank of England, they do a lot of work. And the end result was kind of the Lloyd's Corporation AI strategy, which has got some ethical statements in there, some principles of how we will use AI, and then we've kind of used that to direct the opportunities that we go for in the business as well, and kind of shared that with the whole staff as well, so that they are aware that there are some ethics, some principles to the way that we're investigating how AI is used at the corporation. But of course, it's intrinsically linked to data. At one of the previous talks, data ethics was mentioned. That's absolutely key and linked to AI. AI is only as good as the data that you put in it.
Can I just add something very briefly? For anyone who wants to look at a ton of examples of where kind of bias and discrimination has gone horrifically wrong, there's a great book called Weapons of Math Destruction, which is a list of about 15 to 20 kind of public relations nightmares by relatively large organizations. And I think what that book really brings out is the fact that it's about scale. So what brings the benefit of AI is also what kind of introduces the risk. And kind of as you mentioned, humans are biased kind of by construction, right? So it's not just a machine learning thing. It's just that the fact that the scale really introduces could allow it to run away with us. Yeah, so I think one of my favorite, slightly macabre anecdotes is the fact that far more women die in car crashes than men because crash dummies are like male bodies. That's not a machine learning thing. It's someone literally building a crash dummy to look like a guy.
That's old-fashioned human bias.
Exactly.
That's why,
So it's the risk is taking that and scaling it with the opportunities that kind of AI gives us to scale kind of processes. That's what really introduces the challenges. Sorry.
Thank you so much. We had very comprehensive answers for both parts of the questions. Now it's time for you to throw your questions to the panel. Any questions, please?
This one there.
Hello, Yasmin Durrani from Swiss Re Life Capital. I mean, I'm just asking this question, just looking at the title and listening to you all guys. AI powering insurance. Now, every time we try and power something, there's energy being used. So you talked about, large amounts of data, machine learning, all of these processes use energy. And we as insurance companies, we don't just have to speed up our processes, we also pay out large amounts of claims in environmental damage, for example. So is anyone looking at the level of energy being used for AI?
Well, I'm definitely not. No, sorry.
Vivek?
No, I think in most of the examples that we are working with, they're not looking at specifically the amount, or let's say the footprint that's getting created from AI, but they are at another level looking at the amount of the overall data that they're using. So there's a lot of thought right now in terms of data centers and making the data centers more efficient. So they're looking at it at that level across the enterprise, not specifically for the AI yet.
But I think it's a good call out because of the fact that kind of deep learning techniques leverage GPUs, which are power intensive. And I was actually in this venue last week at the ABI conference, and at least 30-40% of the conversation was about kind of climate change. So it's an interesting meshing of those worlds, but I don't think people are, at least most organizations that I know and I'm familiar with, aren't addressing it at that level. It's more at a holistic kind of sustainability type conversation. So that's something which I guess the industry needs to look at more than it does today, for sure.
So maybe a call out for academics for more PhD topics.
Exactly, yes. This is a very important area that we should all work together. Thank you. Craig, would you like to add anything to that question?
Very good question, and no, I don't think it's part of what we've been directly looking at, other than what Alan you mentioned in terms of like the computing power that's required, and yeah, we're shifting all of our processing to the cloud, and so we're probably as guilty as anybody else, but no, not specifically focusing on that. It's a good question.
Thank you all. Any other questions, please?
Hi, this is mainly a question for Craig, actually. I work in the Lloyd's market, and I was just thinking about when you mentioned unstructured data not being at the moment subject to AI research, or is there something in the pipeline for unstructured data? And if there isn't, doesn't that mean that there are limitations for AI in the London market, which is mainly based on that human contact between brokers and insurers?
Yeah. So there is there is a lot of unstructured data in the Lloyd's market. Recently, Blueprint 1 was published by Lloyd's, and the Future at Lloyd's, the program. Hands up anybody that has read the Future at Lloyd's Blueprint 1, just to give me a feel for. Okay. A few hands, good. And the update to Blueprint 1 came out from our CEO, John Neal, last week. So the reason I mention it is because the fact that there is unstructured data and a lot of it, and it's not the most analysable, insightful way of capturing data is recognised. It's a big shift. I've been at Lloyd's just over 2 years now. My initial role was kind of raising awareness of the problems that unstructured data can give you for your business, because there was a lot of focus on, oh, wow, Craig, you can go and do some fancy AI work, and you can go and do some fancy machine learning and data science, and it's like, well, yes, I could, but in order to do that, I really need lots of good quality data to run through all these nice, shiny, glossy software that's coming on stream. And in a way, I mentioned earlier about proof of concepts. We ran a series of proof of concepts. Some of them succeeded, but some of them failed. And the failures were as good as the ones that succeeded, because they failed because the data was bad, because the data was not captured in a structured way, which means it couldn't be analysed. So we were able to portray a story. Look, if only we had data like this, I could have done this. My team could have done that. So looking now at that blueprint and kind of the data first, I think is one of the most common couple of words in that document. I think it's been recognised now that the data at a granular level in a standardised way is kind of key to pushing the market future, the future of the market in the kind of a classic digital transformation. So the answer to your question is yes, I think, and that will enable us to build the claims straight through processing that's mentioned in that document, the risk exchange, kind of using the structured data that the market signs up to, and then aerial imagery was mentioned in terms of, we can put a machine algorithm over an aerial image of a property in the US. We know we can do it. It's just kind of building all those components together, of which getting structured, high quality data is kind of the starting point of that. Does that answer your question? Okay.
Thank you. Any other questions, please?
Hi, Tom Witt from Bupa. Thinking about artificial intelligence, it can mean a lot of different things to a lot of different people. And I guess the way I look at it, it could either be considered that you train a model and then you deploy it, in which case in some respects it becomes a bit like a standard software upgrade kind of change control process, or it can be a model that you allow to refine itself live in your environment as it's getting new cases through. Which of those models do you think is more common, and what does that tell us about the staffing needs inside organisations? Is this going to be an internal team, or is this something that's mostly going to be delivered by external consultancies?
I think today, most productionized machine learning applications are of the first bucket, which you mentioned. I think that's based on insurers and broader FSI's kind of reluctance to take regulatory risks which have a kind of some form of major impact. I think I know that there are kind of use cases of unsupervised machine learning in production, especially in the risk domain, so trade surveillance in investment banking, for example, fraud detection in insurers, but not where there's a direct customer impact. So I think it's a lot about understanding the use cases, which kind of determines how bold an organization can be with what they experiment with. I think in terms of the makeup of organizations from a skill set perspective, I think it's an unambiguous fact that I think there's no insurer here which doesn't think they need to be more digital, more data savvy, more kind of machine learning expertise in-house. There's a reality that changing the mothership of a large business takes time, and therefore, certainly in the short term, kind of partnerships with InsurTech organizations, consultancies, I think will continue to play an important role. I think the other bit which maybe slightly on a tangent, but I think pertinent to the question, is what happens when you have players who do have those skill sets natively, kind of the FANGs of the world, the Googles, Amazons, etc. And kind of how far away does that make them from the insurance company of the future? And a lot of people kind of worry about that. I think there's a regulatory constraint there, which means that they're probably be slower to entering than people assume. Not that it's not a very reasonable possibility.
Yeah, just two things to add to what Alan said. First of all, I do personally hope that there's a big role for consultancies and third-party companies, because
not biased.
Yeah, no bias there. I've got to pay my rent. But the second part of it, I think the constraint here is explainable AI. I think that's the barrier. If we get to a point where we can have a deep learning algorithm, but someone says, look, I understand it, I can explain it, and it's free of bias, and I can prove that, then you do start getting to a machine that learns by itself. But right now, to Alan's point, because that barrier's not been crossed, you're still at that first stage.
Yeah, just a couple of very quick points. There's the Lloyd's lab has come on stream recently, and we've seen no end of startups in the InsurTech space pitching to Lloyd's lab, and AI is one of the most common things that I find in the kind of the brochures for those InsurTechs. When you actually probe a little bit deeper, sometimes AI is used a little bit loosely. I think it's fair to say, but also what I can see happening is kind of an ecosystem. I don't think there's kind of just one organisation is going to solve everything. It's going to make multiple companies, perhaps in the InsurTech space, delivering their point solutions, working together, and having that data flowing between everybody to build that ecosystem. Working with the knowledgeable established staff in the organisation. The other thing I wanted to mention was related to your question. Getting staff on board was one of the big lessons that I personally learned when I was implementing some of the AI solutions. It was absolutely key to get the team working with you that know their subject matter and are ultimately going to be the advocates for your solution going forward, you hope. So you need to get them on board and on side, and they understand it. One of the principles we put in the strategy was no black box solutions. We want to absolutely know what's going on when you lift the bonnet up. In order to do that, you need to have the trained staff as well. So we've kind of made it everybody's mission in Lloyd's to we've got this phrase, data is for everyone. So we've developed a data science course, but it's a data science course that we deliberately term fundamentals and non-technical. So you don't have to be a hardcore R or Python coder. It's just about understanding, what is data science all about? What is machine learning? What does AI actually mean? And that's had a good deal of success. So if anybody's kind of thinking of trying to run that course in their organisation, I would encourage you to do it, because we started really small scale, weren't quite sure what response we'd get, and we were overwhelmed, and we ended up with a waiting list. And I think that kind of approach to get people on board with this really helps.
Thank you very much. I think we are coming to the end of our session. It was an amazing panel. Thank you, our panelists, and thank you all for all your contributions. Thank you.